now for the latest market update.
Market falls like a knife.
The weak hands are out, the strong hands own it.
If you think trading is easy, that's the fastest way you will actually get wrecked.
With your hosts, Jackson and Giovanni. This is COINTELEGRAPH'S Crypto Markets Live. What's up, everyone? Welcome back to another episode of Crypto Markets Live. I'm your host and journalist, Jackson from Cointelegraph, and today I have the pleasure of talking to two very experienced traders, CryptoBirb and Big Chonis. How are you doing today, fellas?
Great. Thanks for having us.
Yeah, I'm very excited. Thanks for having me as well. I'm very excited and looking forward.
Awesome. Yeah, it's great to have you guys on. So before we get into the stuff, just a few announcements. Last week, we had a contest to guess the price of Bitcoin right now. And the price of Bitcoin right now is $9,376. You can, keep track of the price right down here. There's a nice little ticker on the screen. But the person who was closest last week was Joe Homoke, who guessed $9,350. So just a few dollars off. It's pretty amazing. So Joe, to claim your $100 of CT merch, just email video@cointelegraph.com. You can find the email address also in the About section of our YouTube page. So get that good stuff. So today we're going to be looking at, the Bitcoin market. We're going to be taking a look at some of the top altcoins, getting the analysis on that. And then we're going to dive a little bit into the process of trading with our two guests here, how they approach it, how they make their decisions, what kind of rules do they live by. So as always, guys, make sure you're in the chat asking your questions. I'll be taking a look at the chat. I'll have people feeding me your questions, and we can get you guys involved here, get you part of the discussion. So don't be afraid. Just write your questions in the chat, and we'll be there, and we'll get them to our guests. So yeah, thank you guys for being here. And if you enjoy our content, please hit that like button on the video, subscribe to our channel. We bring you the show every week, and it's great to have you guys supporting it. So without further ado, let's get started. So first off, we'll just take care of the big things up front. What's going on in Bitcoin right now? We've had, a significant move today, which is always interesting given the recent sideways nature of the charts. So, Chonis, let's start with you. Can you give us a breakdown of what's going on with Bitcoin right now?
Sure. Thanks for having me. Really appreciate it. As you said, yes, this is a very interesting time now in what's going on. We all remember back in March, the epic dump Bitcoin experienced along with the overall equity markets. And just like the equity markets from those March lows, Bitcoin has had a tremendous run, from the break of almost $4,000 in early March to basically rising almost 150% and just tickling $10,000, a couple times here. So this has been a tremendous move in Bitcoin. This happens a lot in the history of Bitcoin price action. We have a tremendous move down, followed by a counter rally on the way up. But what we have to ask ourselves right now is, after another attempt to break $10,000 and another, as so far, pretty strong rejection, what is the market telling us right here? How many times can 10K be either tested and fail to break, or tested and find its way over it, and not just over it, but to maintain price action over $10,000 still is a very significant hurdle that Bitcoin has yet to prove.
Burb, what's your take on the latest rejection of 10K by Bitcoin?
Well, yeah, I think this is, like, first of all, I agree with Chonis, because, well, it's been an extremely, I would say, satisfying to watch rally since the very dump on March 13th. I was actually very lucky to be able to watch this dump happening. It was a crazy time. Everybody, just like a couple of years within the Bitcoin history so far, everybody at that point was, just kind of shouting, oh guys, like, Bitcoin is dead, we are done, we're not going anywhere else than zero, and so on and so forth. And well, at the same time, when you watch such a sentiment, right? And when you're a serious investor, when you are kind of like thinking like not necessarily like a retail, but more like I would say institutional money that actually wants you to think that, well, then this is what generates, I think, the financial buying opportunity for an underlying undervalued asset, right? And well, taking into consideration the previous past, well, pre-halving, well, the mining costs and all that, and the hash rate, there was definitely, well, it's a very temporary moment, well, within the mining activity, that by some people was considered to be like a miner's capitulation, but at the same time, it was definitely not as strong as the actual miner's capitulation, back in 2018, when Bitcoin was trading, just down around like 30K, 30, I wish, 30, right? And well, since that, and then combined with extremely bearish sentiment, fear and greed index was oscillating around like 10 points. Now we've had marked like an amazing rally above, as far as I can remember, up to more than between 160 and 170%, without even any serious correction, right? Which is, I think, very significant and meaningful. Well, because it only shows how strong the demand was down there, around, like, let's say, MA200, right? The 200 week average that was oscillating back then around 5,200, and this was an ultimate demand that got very quickly filled.
Cool. So let's now take a look at what you think is going to happen over the next few days. Where are the support levels at? We got a question from Paul Oliba coming in. He's saying, what's the next support level? So what kind of targets are you guys looking at over the next few days? And maybe you can show us your charts as we take a look at where Bitcoin's what you're looking at in terms of what's next for Bitcoin. Chonis, let's start with you.
Sure, I'm going to do a screen share here. If it's funny, when I was preparing for this, I was planning on saying that for Bitcoin to kind of get over the next hump, it needs a catalyst, and normally it needs to bounce off of something. You have to generate that momentum to create that. As Birb said, the MA200 on the weekly was again another catalyst for a nice bounce in Bitcoin. And I'm on the daily chart here. I have 3 moving averages up. We have our MA50, our 200, and 100. And I was basically saying, okay, the first meaningful moving average support would be the MA50. It's around $9,100 here. And as you can see, so far intraday on this day, we did wick down. We broke it by, $50, $60. And so far, we have a nice little bounce off that first moving average. What's interesting about the MA50 is that we can see back here in early April how it acted as initial resistance right here when Bitcoin initially tried to break above it. Several times here, resistance, resistance. And a very key candle was this guy right here, a very nice bullish candle here that was able to close above the MA50. And then as you can see, the follow-up candles on the back test were able to basically ride it and then advance from it. So historically speaking, recent history at least, that is, the MA50 has been resistance, turn support, back tested as support, and then off to the races we went. Now, fast forward to today's price action, we finally tested it for the first time. We have a little bounce, but this tells me a few things. A, it's a very meaningful area of support that Bitcoin does need to maintain. And if we fail to hold it as closing candle support on the daily, basically a candle close below the $9,100 area, then it could once again turn into resistance. That would be a very bearish sign there, as it's been support ever since the break here. And if it was acting as resistance, I would then be more focused on the next level of meaningful moving average support. The 200 and the 100 seem to be right in line here, and that puts us somewhere in the lower 8Ks. Now we have to keep in perspective, being oversold too fast here. We were on the doorstep of $10,000 yesterday. Bitcoin has fallen almost $1,000 from yesterday's highs. So we have to keep that perspective in mind. We are short term. Obviously, a little oversold here. Bitcoin is clearly reacting to, as I said, all over equity markets that are also in the red today. So any short-term bounces would be expected at these oversold levels. We had RSIs that were, breaking below 20 and 15 on some lower time frame charts. So we might hover around here for several days and see truly how strong this MA50 is. But if it does fail to hold that support, that next area of moving average support would coincide to something more along the line of the lower 8Ks. But I don't expect that to happen, tomorrow. I still think there's a lot of buyers here that are prepared to purchase Bitcoin. And just to keep an overall, higher low mentality in place here, we're still holding up. Here's our lows here of our May 11th. We had a higher low touch of May 25th. And now we have a higher low touch of June 11th here. So even though we're seeing a bearish day here, if we expand our visual spectrum here, Bitcoin is still holding higher lows until proven otherwise.
Cool. Thanks for that. Yeah, I hope that takes a stab at your question, Paul. Thanks for that. I think it was a good question. And Sizzy Moon was picking up at what you were saying earlier. He's how many times is Bitcoin going to try 10K to 10.5K resistance? He's counted 6 times in the last 2 months. I think, a lot is your answer there. Yes. And probably more to come. So CryptoBirb, are you also eyeing those same support levels as Chonis?
Yeah, that's actually, well, I would not say this is extremely extravagant way, to measure the supports by using MAs, the moving averages, right? And the reason is, well, let me actually just first screen share that. There you go. Yeah, so within all the actual moving averages that I use, right? It's often, or more often than not, it's like a set of MA50, MA200 as the core ones, and MA100 as a kind of like a middle one, right? So here on the weekly chart, well, what we've been seeing past couple of weeks, right? Apart from this obvious insane great rally, was the fact that since the past 3 weeks, we started slightly diverging, right? And well, this is an indicator that is called Verbicator. It's my own custom indicator that kind of consists of the stochastic ribbon that consists of the histogram that kind of represents and visualizes the data, well, momentum converted Tenkan and Kijun, right? So it also kind of implies here the parts and the basis of the Ichimoku system. And when both combined, just follow the very same direction, just the way it was over here, or just the way it is here, they are aligned directionally, right? This is just proving how strong the trend is, okay? And here in this very context, well, it was kind of like a clear situation that since the past 3 weeks, we've been slightly diverging over here, okay? And when there is a divergence between the stochastic and, well, similar, I would say.
Verb, if you don't mind, I think it's kind of difficult for our viewers to see what's going on down there, just because we have a title on the screen that's
okay.
So if there's a way for you to expand it a bit, that would be.
Oh yeah. Yeah. Sorry about it. Yeah. So basically, what I was saying, right? The main point about the indicator that I use, it represents and combines a couple of indicators that point out the momentum, and the momentum is actually, well, the pace of a trend, right? It's like this impetum, just just the way you're kind of physically moving the car, right? Or it's driving, and from the moment that you push, the brake kind of pedal to stop the car, right? It takes a couple of meters and couple of seconds until you actually stop, and that's the same that happens with the dynamics of a trend, right? And well, the trend itself is nothing else than just group of people, right? The trend is by the definition is a directional movement of, well, in case of technical analysis, it is a directional movement of price, and well, it only means that if there are people following some direction, which is, well, every candle represents some sentiment over like from investors, and well, when there is a strong alignment, for the stochastic ribbon and this second, Tenkan and Kijun Ichimoku derived momentum oscillator, also represented by this histogram, that it is only means that from this period, right, from this period towards, let's say, this one, the trend was definitely the strongest one, right? It actually started, just with the uptrend started within this very place over here. But the moment that the stochastic kind of like crossed over here to the bullish side, it's been rallying up with no signs of exhaustion, right? And that no signs of exhaustion was actually a completely different story than what we had over here, right? Because here, well, we kind of like lost the momentum, lost the impetum already while testing, 10.5. While here, we're getting very close to, the previous area of supply of 10.5, we actually were nowhere near exhausted, right? So this tells me a lot that now, when we compare actually the previous, I would say, retest of 10K, the investors were way more exhausted and way more, I would say, insecure about breaking out towards the new highs, right? So right now, in fact, the way I look at it, while the momentum is not really printing any, just a bearish signal over here for any cross, is just showing the divergence, which means that this is kind of like a consolidative move, right? This entire movement is more of a consolidation, and well, you can easily tell that by candles, right? Because we've been uptrending over here and just flipped towards the sideways, towards the horizontal trend, right? And while having said that, we are retesting for just as we guys already mentioned, like for a couple of times, we've already retested, the 10.5 area of supply. And the question is, how many times will we be able, to test it before the further breakout, right? Because the monthly just turned bullish. And this is, I think, the main narrative, right? So if the monthly is bullish, the bigger context is bullish. We've had a couple of bullish fundamental factors to that, such as, the halving, and historically speaking, every halving brought all-time high to the Bitcoin. So technical analysis with the main principle of that, well, the history repeats itself, or at least it rhymes, then this speaks a million if I say that we are consolidating around the resistance, and consolidation at the resistance after a strong impulse move, right? This is most likely as a continuation signal over the long-term period. But whether we really, just locally break down towards like 87 towards the MA50 support, or even like, 72, or, which is, I think, not really a big case to expect over here, 60, 100, right? No matter what we do over here, the monthly would still likely be bullish. And well, there are still more bullishness and bearishness in the long term, right? So short-term support is 8,700, but in fact, well, I will not be extremely eager to short it prematurely.
Mm-hmm. So, Chonis, do you still see the overall trend as being on the bullish side, like CryptoBirb was explaining?
Define overall trend, because we have such a different time. Well, there's so many ways to look at it from a different time horizon. Like, is it bullish in the past couple of weeks? Absolutely. But overall, are we in a bullish market, and are we prepared at this point in Bitcoin's history to have the potential to retest, all-time highs? In my opinion, we're nowhere near that. The way I like to keep my perspective more or less in check, I'm a big fan of higher time frame, higher time frame charts, higher time frame oscillators, higher time frame patterns, to get more of an overall sense of where we're still hitting major resistance, and then where we could basically be able to quantify that resistance has been broken. We've been in this overall triangle for years here. I mean, remember, we're 3 years almost outside of Bitcoin all-time highs of 20K. We're putting in lower highs. Now, granted, we are putting in higher lows, but we're putting in lower highs. And if you quantify those lower highs and higher lows, sub the wicks here and there, we're putting in this triangle here. We have basically a triangle of consolidation, and we're closing in ever so slowly on an eventual apex and a decision point. Now, this triangle consolidation can take us to the end of this year, where we're finding a range, let's say above 6,500 to 7K, but more or less below 10K, until a more meaningful break of either one of these two barriers is happened. We either fail to hold the lower support by closing candles more than just the wick break here on the weekly, or we're able to advance above this triangle of resistance here by more than just a wick, but by a really definitive overall closing candle. Burb mentioned the bullish catalyst that we are seeing in the market right now. The halvening definitely is one of them. And yes, historically speaking, every time we have a Bitcoin halvening, Bitcoin, little dump, little consolidation, and then, off to the races, all-time high. But Bitcoin's always been bullish. I mean, Bitcoin's always put in over a long period of time higher highs. So yes, we have a halvening where there's a lower inflation rate of Bitcoin, and overall that is bullish when we have basically a pegged inflation rate somewhere a little below 2% now. That's definitely a helpful factor for the long term. But there are several catalysts that can significantly affect the price action of Bitcoin bearishly. We talk about Bitcoin as a decentralized asset, and it is. But when you have 90% of Bitcoin, owned by 4% of the wallets, it's still an centralized to the top in terms of who actually controls and owns Bitcoin. And because of that, the manipulation and the market force that these whales can still impose on the price action is significant. It doesn't take a lot of coin in a leverage market to significantly affect the price action. And so as retail traders, as we are basically at the mercy of whichever way these whales want to play with the price action of Bitcoin. So until Bitcoin is spread out significantly more among the masses, you won't find that stabilization in the price. And I expect to continue to see, significant volatility, over the years to come, until we're establishing much more of a cleaner base of overall historic support. Not just the factors when it involves mining, hash rate, the whale manipulation, but there are so many things that can factor in the overall price action of Bitcoin. And the last thing I'll say about that is the biggest thing I think that still impacts the price is the overall equity markets. Bitcoin is still a tremendously risky asset. I still feel it is of the riskiest assets out there. So if we're seeing bearish pressure in equity markets, we have not seen a divergence yet from Bitcoin in terms of it not being affected by bearish price action and not being affected by bullish price action in the markets. The markets were basically bullish all through 2014, 15, 16, and so was Bitcoin being able to ride that up there. So until Bitcoin can de-link from the overall equity markets and stand on its own in terms of which price action direction it wants to take, it's still at the mercy of those forces.
Thank you for that. That was a very broad and deep look at what's going on in Bitcoin right now on the larger scale. And I'd like to give Burb the opportunity to comment on all of that. You touched on a lot of different topics there. First of all, this consolidation we're seeing over the past few years heading towards some sort of big breaking point. I wonder if Burb, you're also eyeing that. And then also looking at the bigger scale, how the whales are manipulating the market, what risks are involved in that. And at the end there, he also touched upon the potential correlation, the correlation between the stock market and Bitcoin, how Bitcoin is still viewed as a risky asset and can sometimes mirror the moves in the stock market. So Burb, the floor is yours.
Yeah, well, that's just been a waterfall of questions, right? But yeah, well, to be frank and to be honest, okay, I completely agree with Chonis, and I believe with everybody that just speaks of their mind about a Bitcoin. Well, because we need to be realistic about it, right? We as investors, well, we should care about the fundamentals about within our utility, which means the ways how to make money on that, right? And in fact, well, there are people, that just came here for the technology, right? Or just, just they like associate with some project and they love some project like crazy. I don't know, right? So assigning and putting any kind of like emotional states towards projects, towards some companies that you're investing in, well, it either means you're already like over-invested, over-leveraged, right? Or you're just simply making the mistake, well, in an unaware way, right? Because, well, assigning and putting emotions by any means, well, be it fear and greed that drive both entire markets, well, does always make a harm, right? Does always make harm to our trading, to our money, because trading itself is just nothing else than actual calculations and what is a good ROI, what is a good return on equity, what is actually good, and what it means for you to be profitable in that trade, right? And then all of a sudden you only use and apply fundamental factors, fundamental analysis, whether the project is well on point or there are some actual good, well, fundamental, I would say, premises for trading given asset. And but still, I mean, it's always a game of emotions, right? And this is what drives such an extremely, I would say, spectacular rallies, just like this one, right? That Chonis said, or like these extremely large, dumps that occur in the Bitcoin that is famous for, right, or infamous. And this, this fact of, well, Bitcoin itself being relatively new when you compare that, by market capitalization, right, or well, daily traded volume, or actual, I would say, like interest, right, the public interest. When you compare that with equities or other commodities like gold, silver, right, copper, and so on and so forth, you're going to discover that we are like very, very early, right? We are at the very early stage still, and that well, when you compare, well, I didn't look up the market cap for Amazon, but the last time I checked, it was like 1.15 trillion, right? So it is like way larger than entire crypto market. Well, entirely, I mean, speaking. So and it would definitely take a long time for us to get there, to get to such a scale, right? Because, well, Bitcoin, for all the reasons that have already been mentioned, is a very speculative asset, right? And it's mainly speculation driven. You don't really get any people behind it, right? You don't get to see the faces. You don't get to see the face of Satoshi Nakamoto, right? That could have like bring some human capital to that, perhaps, as the founder or well, creator. Well, if you compare that with equities, right, then behind every larger company or stock, there is also this leader, right, like Jeff Bezos or Bill Gates, or Elon Musk, and so on and so forth. And these guys, show their faces and represent the brands, the companies. And for this reason, well, Bitcoin not having that and being completely decentralized, or as Chonis said, not really completely decentralized, because, well, it's still mainly within the possession of very fake wallets. I think this will definitely take time for us to develop. But I think, fundamentally speaking, we are on the very good direction. We are on the very good and well, positive track and path towards it. And the reason for that is, well, because we put new well, promising regulations, let's say, right? The reason for Bitcoin volatility is the, well, low market capitalization, the actual that just simply speaks, of how much money is actually sitting and trading in the market. And within such a young market and such a speculative asset that's not really backed by, I would say, fundamental values, just the way equities are. Well, we can obviously talk, about the utility, the ways to utilize Bitcoin and how it, can be performed of better version of money. Well, the truth is, in my opinion, okay, it's likely never going to happen for Bitcoin to be a global currency, right? Because there are multiple economies, and any attempt in history of humankind to kind of like merge, economically, the states or not necessarily referring to United States, but overall attempt to merge some countries. Well, economically speaking, it's very hard to say, at least, right? And for that reason, we are kind of like doomed, I think, for Bitcoin to remain speculative asset mainly, right? And speculative means not backed by the fundamentals, means mainly that this is going to preserve some form of volatility that is completely unique to that. And but this volatility also comes from the regulations, as I said, and from the regulatory part, because when you are given regulations over that, when SEC just approves it as a commodity or security, for Bitcoin or for any other cryptocurrency, this automatically opens up doors, for more serious investors, for larger money, right? For this entire investment sector, like hedge funds, right? Like if it wasn't for CME that just gives you like contracts, for futures and for options for at least like 5 Bitcoins per each. Well, these are the institutions like the hedge funds that want to build up the risk of their portfolio and hence boost some profits in a, I would say, preserved manner. These are that move the market, right? And the whales come from institutions, and the whales come, from let's say private equity, private, people. And these are that move the market, okay? And these are the responsible for actual market swings and reversals on the larger time scale, just like it was over here, right? Or just the way it is over here. Like it always comes with a large move, to the upside, okay? Or with a large move, to the downside, with a large move to the downside, obviously, and upside and so forth, and so on and so forth. So it's all cycles, right? And so moving in cycles, and every cycle peak or bottom or trough, no matter how we call that, does always come with whales steering the market. And the rest, the actual participation, as we call it, comes from people from the street trading that asset, right? And to what extent they will be interested to trade this asset is also obviously driven by media, right? By media, and because this is what drives the actual like a sentiment, right? And if I actually saw on Twitter this great like an article header. I believe it was Winklevoss brothers in their like sweatshirts with blockchain on, like just a sign symbol, and the headline was "Everybody's making money, but you are not," right? And whenever such a header appears, well, this steers the people who are not aware of how to trade Bitcoin, first of all, to Google that, then to move on to what, all the new traders have been doing past couple of days on Robinhood as well, right? With equities, just buying, loading call options, for bankrupt companies, right? It makes completely no sense. It's irrational, and it's driven by media, purely by sentiment. And for this reason, I do believe that we are still very early. And when it comes to actual adoption, this is another thing. But purely speaking of investment, just perspective, we should be caring mainly about the fundamental factors, and the fundamental factors are that every time that Bitcoin drops below the mining profitability in a way, it's considered rather undervalued, right? On top of that, if we align some directional technicals such as the MA 200, which has been growing since forever, okay, for Bitcoin, it just represents averaged price of long-term, just Bitcoin movements, and it keeps growing. So we know that, we know the long-term direction, to be fair. So anything that just happens over here, right? Or be it, just, which I think we'll finally do, and sooner or later break out to the upside, okay? It's all just a short-term deviation, let's say, or mid-time frame deviation over the long-term trend. So the conclusion is majority of traders would do much better if they just held for the entire period rather than just day trade, because 90% of traders lose money by day trading.
Someone should take both of those responses and like put them somewhere for everyone to see, because it just totally picked apart the Bitcoin space. I hope everyone watching was paying attention to that. That was really awesome. Thanks guys for sharing that. So I think, that'll probably close us out for Bitcoin. We just, we could spend so much time talking about it, but I also like to take a look at what's going on in some of the other altcoin markets. And guys, for all of you watching, just remember, write your questions in the chat. We're watching. We're paying attention to that. And if you have something you'd like to ask them that you want answered, just write it there. I'm watching and I'll ask it to them. So we're gonna try and take a look at some of the top altcoins. We're gonna take a look at Ethereum, XRP, BCH, Litecoin, and Chainlink if we have time. So first, let's start with Ethereum. I'd like to see your guys' analysis on what's going on in Ethereum right now. Chonis, let's start with you.
Sure. So Ethereum. All right. I would basically, if I want to talk about altcoins, I really don't quantify one different than the other in terms of this one has a better chance of mooning more than the other one here. My very first altcoin purchase was Litecoin back in 2016. And when I was looking at the app that I was able to purchase Bitcoin at, it was like $600-700, and there was Litecoin at like $7, and it's like, well, why do I want to buy something for this $700 when I can buy this thing for $700? Or I can buy Ethereum for, at the time, it was like $140 or so. Monster gains for sure have been made on the altcoin market. Bitcoin basically adds liquidity and valuation to the overall crypto markets. When Bitcoin is bullish and ranging, we tend to see money start to be pulled out and flow into altcoins more or less across the board. Some have definitely stood out than others. It's interesting if you look at the top 10 from market cap coins now, and you compare that to what it looked like 2-3 years ago. There are names on there that are still in the top 10, and there are several names that are brand new. So I'm not gonna say that I favor one particular altcoin or project than the other one. In my heart, I am a Bitcoin maximalist. I do feel like it is the one, the only one. I don't have a problem with altcoin trading by any means. There's lots of opportunities for sure. The thing about it, though, is let's look long term. Are these projects that claim to basically be able to fix the things that are to make, Bitcoin obviously has limitations. So here's a coin that solves this problem, and makes it easier to transfer and faster transactions, but it's not decentralized. So Bitcoin, over all of them, has this decentralized aspect that will always put it above all these other coins that are run from more or less a centralized nodes and what have you. I will always look at the altcoin market as risk versus reward. There can be a greater risk in them in terms of Bitcoin price action, but the rewards from a percentage standpoint can also be very significant. You mentioned Chainlink as one of them, and if we look at the past few years of price action in Link, it's one of those coins, other than certain other altcoins, that seems to be finding nice support and has obviously been moving up more or less, and has kind of been a leader, if you will, in some of the altcoins when they have been able to pump along with Bitcoin. But I don't see any particular project that is standing out to me, or any kind of white paper that says to me, this is the game changer. This is the one that will take on Bitcoin as a whole. So I will always look at it from a trader standpoint, where there are opportunities in the chart in terms of being oversold or overbought. But if I'm coming to think about Bitcoin and crypto from a longer term investment standpoint, I personally don't plan to hold any specific alts into the future, hoping to get that next rally. There's a very good chance that the next Bitcoin bull market, the biggest alt movers that will be part of that, potentially aren't even out there yet, or they're super low on the overall market cap. And if you look at past top tens, there's coins there that you've never heard of and probably never will again, just that keeps on cycling through. I think what's bearish for Bitcoin in regards to the altcoins is, Bitcoin dominance is around 66-65% now, and has been so for quite some time. So 40% of the money in crypto is in non-Bitcoin assets. For Bitcoin to achieve a maturity, and I absolutely agree with Burb that Bitcoin is still a toddler at best in terms of this market here. But if it wants to get through the teen years and achieve some level of maturity, a lot of that money needs to be sucked out of the altcoin markets and put into Bitcoin to really establish that. And we're not there yet. I don't see how Bitcoin tackles all-time highs when its dominance is in the mid 60s. When Bitcoin finally breaks 20K in the future and onward, I expect dominance to be in the high 70s or 80s at that time, as money flow is exiting alts and going into Bitcoin, because at that moment it will be proving itself as the king and the leader. So opportunities in altcoins, absolutely. But longer term, there's really no rationale as to why these alts won't drift their way to zero valuations at some point. And sure, there will probably be some that will survive in the years to come and will probably increase their valuation standpoint. But that's kind of how I see this market until altcoin valuations diminish and that money can flow into Bitcoin. We're still very far away from trying to test those all-time highs.
Thanks for that. That's a really interesting perspective on Bitcoin versus altcoins. And I like to throw it over to you, Burr, but I also hope that we can, take a look at the Ethereum chart, what's going on in the market right now as well, and look at some technical analysis of where you think things might be heading there.
Yeah, sure thing. I mean, there's been a lot of great words, from Chonis on that, and I completely agree. And on top of that, I can only say, with regard to altcoins, again, I'm not a big fan of emotional approach, right? So the case whether you kind of like believe or not believe or love or hate the project, well, technically speaking or practically speaking, it shouldn't be actually bothering any serious trader, right? Because what a serious trader looks like, well, it looks like, because I would say they're just bold, but the way that serious traders operate, okay, they care only about the profitability measured by ROE, ROI, right? And the risk taken. And there is also like this, sizing for the position, obviously, that needs to be applied. And this all kind of like comes back to the proper risk management, right? And when you're overexposed, when you've just sold your house, and or a car or like real estate, whatever, to pour everything into Bitcoin or to any other like shitcoin, for altcoins. Well, I don't think this is a safe move, right? High risk brings high reward, but this is in very uncontrolled manner. I think this can easily make you go bankrupt, you or your family and friends, right? So this is extremely unreasonable in a way. But at the same time, for altcoins, right? Well, when Bitcoin was trading around 20K on all-time highs, altcoins dominance was around like 70%, right? The Bitcoin dominance was about like 30% back then. And this only proves like how much money was there, well, within the crypto industry, right? It's been record highs, obviously, and we've never since that point pretty much like touch it. But I think it would come, right? And because of it all moves in cycles, right? For every peak, there is a bottom. For every bottom, there is a peak. We, like historically speaking, bottomed out 4 times on a larger time frame for Bitcoin and marked out only 3 highs, and every high of that was an all-time high again. So why, technically speaking, that history would not repeat, right? And to actually well, go and dive into Ethereum chart, right? If you look at it, again, Ethereum is one of the assets that I would be paying attention, that I actually pay attention to the most after the Bitcoin, right? When I trade, I mainly trade along with the market cap, right? Because what I care about is the liquidity, and the liquidity is needed, well, for any. If you're not trading with $100, you all of a sudden start taking care of, well, of being, well, of this barrier to enter and exit the trade, right? Because nobody wants to get stuck with a couple of million with an illiquid shitcoin that nobody wants to buy from you, right? Well, if we zoom it out, for Ethereum, it just becomes very, I would say, well, clear to what extent we actually to what level we marked the entire downside rally, right? While Bitcoin on average drops well, within the bear markets from 80 to 90, like couple percent, measured from the peak to the bottom. The altcoins, because of, again, different liquidity and obviously not being Bitcoin, they tend to get more volatility both to the upside and to the downside, right? And just on the example of Ethereum, okay, instead of 84% or 83%, as far as I can remember, from 20K to 231, 20, well, it marked down the 90, the actual 95%, right? So, and since then, we truly remain in nothing else than just a sideways trend, right? Sideways trend is defined by the directional movement of price. When the price peaks and then troughs, they actually may align horizontally, right? The uptrend, well, is defined by a sequence of higher highs and higher lows, right? The downtrend by a sequence of lower lows and lower highs. So if it's neither of these, we are pretty much dealing with a sideways trend, right? And we obviously, it depends on timeframes that we are talking, right? Because, well, there obviously was some, some mid-time frame trend over here, the uptrend, right, the downtrend, and so on and so forth. But all in all, the large picture, okay, we're still trading within this long-term, well, consolidation, no matter how we look at it, right? So again, consolidation means that there are people consolidating that. There are people who want to buy that, and for the liquidity reasons, that as well, I guess, within lower interest and generally depressed, sentiment over the market, on the contrary to the euphoria, right? You need to be very reasonable about how much and what you trade, right? Because, well, if you're Warren Buffett, right, and want to enter a Bitcoin market or Ethereum, or I don't know, like Chainlink or whatever, okay, by putting like a small fraction of your entire capital, you would actually just print like 100% candle. Okay, so and you don't want to do that, because all of a sudden the trade becomes, well, like, not necessarily invalidated, but pointless, right? So this makes it just bottoms way more, I would say, extended in time, and prolonged over that, just on the contrary, to the very aggressive sell-offs, right, on the peaks. And for all that I've said already, we need to understand, first of all, always the actual market context, right? And the market context is, well, we've been just consolidating for a couple of months, couple of years. And until then, until we start seeing an actual movement defined by, well, moving averages, like if you look at it, okay, then, well, MA200, which is the black dotted line, well, it slightly keeps up sloping, right? The MA100 keeps dropping. The MA50, well, it's been staying sideways since, like, August last year. And until we actually start seeing trend on an average, right, then it truly remains, just as a form of consolidation, right? When we actually dive in, some lower timeframes than weekly, but still high timeframes, of daily, we can see that actual aggression, from the buyers, okay, made Ethereum go and rally, for around 880% ROI swing. And very locally speaking, okay, the very same principles occur, just to be applied for as it is for Bitcoin, right? We've been holding this trend line, okay, for long time. And again, trend line must not be over-interpreted, okay, because trend line is a line that shows you the trend. A trend is a directional movement, okay? So it doesn't mean that, at one point when the trend line is broken, that the market is like just going to crash forever, that it's dead, okay? It may happen, and especially on illiquid markets, just as it is, for crypto, that, well, you get some consolidation going on, right? And every consolidation, be it like a chart pattern of symmetrical triangle or like a, ascending triangle, right? Or whatever it is a form of consolidation of sideways movement. And every sideways movement, well, technically is all about the range, right? The distance between the range highs and the range lows. And especially, the only way for large money to actually make money on, on illiquid markets is by trapping the people, by generating, fake outs, generating the bull traps and the bear traps. Well, because this is only what locally drives a short-term, like liquidity providers for them, right? So if the market is ranging, if it's going sideways, we see that very often in crypto, that it just, breaks out to the upside, right? Triggers all the algo buyers and all the like late buyers. And all of a sudden, big money knows that everybody will be longing that, okay? And when the asset is overvalued at one point in time, this only provides a large, like I would say, compressed liquidity for buyers, okay, from buyers to, well, dump large money and stake and take profit, because this is the way to take profit, right? Every sideways movement, be it this or this, is just a take profit for those who actually bought this, okay? And so short-term speaking, okay, or actually mid-time frame speaking for Ethereum, we've been holding this uptrend, okay, represented by this uptrend line, but at the same time by moving average, okay. The averages, these are not like some magical lines, okay, that like with some magic you kind of like apply and then it just pops up to be, definite support that must never be broken, okay. They just represent trends, and it may happen very often that, well, if the moving average is growing, right, the price is oscillating around it. And whenever it's breaking down, it's technically just providing a sell signal or breaking out, to the upside. It's bull signal, it's bullish signal, buy signal, no matter how we call that. But it's still, well, for actual trend, I would say, definition, okay, it needs to be consistent. It needs to show you the direction. And here the direction is clearly up. Okay, it's clear uptrend. So Ethereum is an uptrend. Short term, is just consolidating, right above the support over here. And support can be easily provided by not only the trend line alone, right, but also by the cluster, from first of all from DMA, okay, the range lows over here, right. If we actually just put some levels to that, there's obviously, just see how perfectly it aligns, maybe not to the peep, but again, trading is not to be exact to the peep, right? It just needs to be, well, there. The direction needs to be there, and when the level like this right, is very often tested here as a resistance, here as a resistance, then just very big breaker, boom, okay? Then we just simply use the polarity change principle that says that broken resistance turns into support, and that's what we've just done over here, right? And represented by the short-term demand over here between 225 and 235. So this is a short-term demand, and well, we're just going sideways over an uptrend. So technically, it's still showing some strength towards going bullish, okay? Towards, you know, just growing further. If it's going to retest first the MA50, okay, well, this depends on equities, on actual intermarket analysis, and well, to what extent COVID can again just influence the market.
Thank you for that. That was a really, really thorough explanation of what's going on in Ethereum right now. I really appreciate that. And I think I want to give Chonis the opportunity to maybe Chonis, for the sake of time, I'd like to move on to a different altcoin. I think that was really thorough on Ethereum. Chonis, you mentioned Chainlink earlier. I remember. Do you have any technical analysis that you'd like to share about what's going on in the Chainlink market?
Yeah, sure. I mean, I mentioned that it has. Let me find a good one with a lot of history here. It's a little tricky to find one that has the most kind of history here. Let's see. Maybe altcoins need a narrative. You know, they need a story. You know, Ethereum was one of the early ones, so it has kind of that legacy to it, but it also has you know, a story. It has the smart contracts. You know, Chainlink can have something of a similar situation, and we basically see a lot in crypto, kind of that cult following. We see it with the Ripple army, and we see it with some other coins, and Link is one of those coins that has kind of a very loyal following. What drives altcoin price action historically is news events. It's partnerships, Link partnering with Google, and some sort of a collaboration there adds a narrative to a potential of bullish price action here. Once again, from an altcoin that, you know, when we bottomed in the you know, the 1617 region there, it's another example of, you know, another 150% move that's occurred again in an altcoin. We see that across the board with other ones. But what can separate Link, you know, from other altcoins? It's to continue to drive a narrative behind it, a use case, and a lot of altcoins have a lot of hard time proving that, showing this is actually a use that can be helpful, and that in sense can add intrinsic value to an overall product. When Link was put on Coinbase and allowed to be traded by other ways, that was a good because it allowed more market participants to basically be able to trade and hodl the coin. However, I will still put it in the basket of overall S coins, and still see it that it would need to kind of separate itself from others in terms of, you know, is it riding on the coattails of Bitcoin? As Bitcoin has pumped from this March lows, so has Link and others. But for Link or other ones to establish themselves, and then to allow the market cap to increase, the narrative and the story behind it has to continue. So I always look to see what news events, what PR certain alts basically are able to put out to quantify the valuation that they're at. We see this across the board: partnerships with Microsoft, or partnerships with established, you know, brick and mortar type companies. These news events have been great drivers of these alts. So as time passes on, what would make me more bullish with Link and others is to see that continuation of news driven events that show that it is a ecosystem that is continuing to develop and being able to show that it can prove a real world use case. And when an altcoin is able to do that and establish that real world use case, that's a very bullish catalyst that can definitely move it higher. I do expect to see Link continue to be in that top 10, top 20 in terms of valuation, until proven otherwise. But a big reason for that is that they have been able to present a news event, use case, and collaboration with Google that has definitely allowed it to stand out. But overall, I'm still very bearish and skeptical on the overall altcoin market. I see them more as trading opportunities. And if you want to hodl for the future, be my guest. With the risk comes the reward for sure. But I wouldn't say that it's kind of be the next, Ethereum that will hit $100 or $1,000. But if the crypto markets as a whole take off, there are definitely coins that have a better chance, I think, to accelerate significantly faster. And I think Link can definitely be one of those, mostly because there's a following that has behind it. Now, Ripple, on the other hand, also has that following, but Ripple continues to fall and fall and fall. So just because you have that army behind it doesn't necessarily mean it's poised for greatness. There are obviously other factors involved.
Yeah, thanks for that. I like how you said, altcoins need a story. I think that's kind of true for all cryptocurrencies, even Bitcoin. Bitcoin's story is the digital gold, right? So they all kind of need a narrative to survive. So thanks for those two looks at those altcoins. And now I'd like to take a look at, hopefully we can get some insight into what your process is. I like to say from the moment you turn on the computer to when you make the trade, it's a little bit of an exaggeration, but I like, what kind of steps do you go through? What factors do you consider when you're deciding to make a trade? What are you looking at? And do you have like a step-by-step process? Do you just kind of like look at the charts and think, oh, like this is a good day for a trade? I mean, what's the process here? Burb, let's start with you.
Yeah, sure. So, well, I think this is a great question to be asked. And to be fair, I think as many traders, there are as many, strategies and different techniques, I would say, to utilize to make you, profitable at one point. But to be fair, I am personally a momentum trader, right? Which means that I trade based on the momentum indicators. And the momentum, endlessly compares the current actual price to very often an average price over certain past period, right? And using this certain past period as an average, it gives you the actual reference point and level to take it further. To decide whether current price action, the short-term price action, is more bullish or bearish to that. And as a momentum trader, right, on the example again of Ethereum, let me actually just flip it perhaps to the upside, right, just to make sure the viewers would see that. So all in all, okay, whenever I approach a trade, first of all, the fundamentals need to be there. Okay, I'm not personally touching the shitcoins. I mean, at the very early day, I was when every altcoin that you could come up with was pumping, just as it was, for the .com bubble back in 2000. It was 2017, that had two phases, right? The first phase was actually the April and May, the second of 2017, and the second one was obviously the all-time highs for the entire market around the November, December of 2017. But for this reason, if you're getting stuck, within the shitcoin that, again, nobody wants to buy from you, right? then you're kind of like lost, and you are the only responsible for your loss. Okay, and well, because you just didn't really prepare any fundamental review of that project, right? Because, well, if you remember, there was actually, well, for some it would be funny, for the others, I guess not really, but there was an obviously the ICO boom, back in early 2018, when every project you could come up with, okay, was coming out with, popping up left and right with ICOs, and well, people were crazy about it to this high extent, well, that they didn't really pay any attention to what the project was about. They didn't even like assign any value to the white paper. They didn't give it any actual reading very often of proof of check or whatever. And well, there was the situation that there was an ICO. They collected like some thick money. I cannot remember, but it was tens of millions to the best of my memory. Well, at one point, they just simply, deleted all the chats, all the communication channels, every Telegram, every like Discord, whatever they had. And the only, communication that they left with, their actual investors with, was the blank website page with left upper corner that was saying, well, excuse it, penis, right? And they just disappeared and they vanished, right? And this only proves to what extent fundamental value needs to be there for a project, okay? They need to actually have some business proposal for you to actually deliver some fundamental value, right? Because again, there are different valuations for, there are different actually approaches, theorems, just what drives the value, what creates the value to the users, and well, especially for the financial market. And well, it is obviously the utility itself, but and to what extent the business just solves and proposes to solve some some problem you're having in a very unique manner, in a very unique way. But it also, well, on the equities, it needs to be backed up with some actual performance, right? So that's why all the publicly traded companies are well reviewed and just audited quarterly or yearly to deliver some financial statements and reports and all that, right? And so there is the price to earnings, like or price to book value indicators that you're using on stock, and you just need to realize what part of a market cycle you're in, right? Whether you are not really just longing the top like it was over here, right, or just shorting the bottom. And that's why I personally don't agree with volatile markets of high beta being traded in the very same manner that Forex is, right? Because Forex is mainly about the relative economic strength of a given economies, right? For between the actual currencies that represents the strength of the economy. So it's definitely not going to be as volatile as cryptocurrency, right? Or as any like stock market or commodity even. And the reason for that is that any changes on the economic scale, they take years to actually solve and print any actual results, right? So any trends that there are on Forex, they take years to develop very often, and everything else is just happening somewhere in the sideways movement, right? Because the long term may be up, but it's moving so slowly that if you zoom it in and want to trade some piece, then it looks like it's just simply ranging. It's just going sideways. But in fact, it's just moving very, very slowly, grinding up, towards in the upward direction. But to be most fair about it, okay. So knowing the fundamental values, knowing the actual fundamental, I would say, premises and fundamental certainty behind the project, you move on to what type of market you want to trade. And when you dive in, when the fundamentals are there, when you're familiar with how this market works, you go and dive into technicals, right? And you always start, in my view, from top to the bottom direction, right? And you start with analysis over high time frames to be able to tell, again, in what part of the market cycle you're in, right? Because, if the setup looks good, right, for buys, and you are just, getting yourself like, collecting money from your friends and family just to make sure you don't miss the rally because, well, some fancy guy in a suit told you that in the news TV. Well, it may happen very often, actually more often than not, that you are just going to buy a top, right? And starting off with high time frame analysis pretty much lets you avoid it, right? And then when you actually decide, well, just for this period, let's say, we know that, again, the larger picture is that we've been uptrending on Ethereum, okay, versus USD. We've been uptrending. So now choosing and actually adjusting the chart and adjusting the actual, I would say, strategy to your, well, preference, whether you are a high time frame trader or mid time frame trader or, short time trader, intraday scalper, whatever, right? You just, well, accordingly zoom in while knowing and realizing the context, right? So what I do per the momentum trading is I always use set of 3 different timeframes at least, and mainly 3. This is the high time frame, which is often well, the weekly or daily, depends on which one is showing you much more in a clean way. But this provides you with a general context. Okay, this tells you again what part of a market cycle you want to approach to trade. Then you actually, just dive in and see within the mid time frame, well, scale, right? So there is this makes it a weekly chart. Then I move on to 4-hour or to 12-hour, again depending on what shows more. But actually, I tend to stick with 4-hour chart, right? So I got a combination of weekly 4-hour chart, and this 4-hour chart provides you with local market context. Okay, so then knowing that we've been, on a massive scale, we've been growing up, we've been going up. Here locally, okay, past couple of weeks or so, we've been just going sideways. Okay, so I just simply know that, well, in general, more often than not, the sideways after a strong rally, okay, is most often the consolidation before the further rally, before the continuation, if the asset is still considered undervalued. But by knowing these, well, the basic, I would say, views, okay, only then can you really zoom in to this period, because, well, that's what you want to trade all in all and make a decision upon, okay, and you zoom in to some, and you zoom into actual, well, lower scale picture to know that, okay, here was some range movement, okay, here was some, well, like a sideways movement, right? And you can easily tell, like, damn, this support was held like crazy, okay, like an instant dump and a very strong, pullback right away, okay. So this is considered a strong demand, like shaven bottom and shaven top candle of buyers, okay. So this is completely bullish one, and all of a sudden you're starting to get completely different, I would say, well, view on what you want to do, right? Because, well, high time frame, perhaps, right? Or if you misinterpret the timeframes, could have shown you kind of like, well, the bearishness. All in fact, that, damn, here locally it was a very strong demand that just got filled, okay. And knowing and realizing this lower time frame chart for an actual entry, whether you want to just enter, if it's a range, it's always safest to enter along on the breakout retest, right, to the upside, or short on the breakdown retest, again depending on the context of the market. And then you can just trade accordingly, right? There is also obviously this 50% range, I would say mid-range level, right? And locally that 50% is like this bias shaper level, right? And above, we are more likely to pretty much like tap upon just the range highs, and when we're trading below, you're just most likely to go towards the, well, range lows. And based on that, right, you actually make and apply very often chart patterns, to enter and decide on a trend, right? So breakout retest for long and breakdown retest for short. That's how I combine these.
Wow, that's a lot of factors you're taking into account right there. But that's really great to see. Thank you for explaining all of that. And now I'm really interested to see how that compares to Chonis's process. Birb is a momentum trader, but Chonis is a day trader. So the time frames that they're dealing with are a little bit different. So Chonis, could you please walk us through, turn your computer on, grab your coffee, what next?
Yeah, it's an excellent question because I think a lot of traders don't know what catalysts they should look for in regards to entering a trade. I think what is so all right. So let's establish first that trading is not easy. It's incredibly difficult. It's not just a battle of the charts, but it's a battle of emotions. And you can be so right in so many things, and you can have all the best indicators, you can have all the best charts, you can have all the best data, and very easily mess up the trade. So the first thing you have to ask yourself is, what am I trying to accomplish in this trade? Am I looking for a longer term entry? Am I looking for something that I plan to potentially hold for a quick scalp, a day trade, a swing trade? What are the catalysts that will say to me, this is a great spot to enter, whether it be long or short? And then the other thing is, what kind of risk am I prepared to take on? What kind of leverage am I prepared to take on if you're doing derivative trading? So these are all the things that a trader has to calculate in their head before they actually do it. Now, the biggest advice I can give to a trader is don't overtrade. It's so much smarter sometimes if you're not sure what to do. Don't do anything. Sit on your hands. Play what if I were to enter a trade here, and then see how it plays out. See how you would have basically done the trade. You can have the best entry. You can have the best oscillator or alert that says this is an opportunity, but actually executing that trade and then figuring out how do I want to set my stop loss, and then where do I want to take profits. I think what can be equally as hard for a trader is, if you're in the green, if you're in a profitable trade, what do? There's this little voice on your head saying this is the entry of a lifetime, and that all you gotta do is hold, and you kind of make huge money. And then every time that seems to happen, it doesn't happen. You basically go the other way. So all these factors I have to basically calculate in terms of how I want to do a trade. So for instance, because I'm a day trader and a scalper, I'm mostly on low time frames. I'm on the 1 minute, the 5, and the 15. I will use higher time frames to kind of set my bias. Where are we on the hourly? Where are we in the 4 hour, the daily, the weekly? What kind of environment are we in? Where are the higher time oscillators basically set up? But if I'm going to basically try and pinpoint an entry, obviously I want to be on lower time frames. And then just keep it simple. Bitcoin tends to go sideways and then have a big move. And I think a lot of people in this market are reactionary and not proactive in basically how they'll approach a move. So for instance, on June 1st there, we had our first basically this nice spike here. We broke 10K. We were at 10.4. Here comes the moon, Lambos, everything's, here we go. And then we did this BART formation where we go sideways here, and then we dump and put in a lower low here from the interim move there. Well, look at the RSI. So this is the 15-minute. I do adjust my indicators slightly. Normally the RSI lines of overbought and oversold, or overextended, underextended, are 70-30. I've adjusted them to 80-20, which gives me a more conservative bias. Okay, where we're over 80 here on the 15-minute RSI. We actually peaked out at 93. Okay, so this is a very bullish move here, but we're way overextended on the 15-minute RSI. So as a trader, I'm seeing that, and this is stopping me from FOMOing in to a big green candle. On the inverse of that, we have this dump, okay? And our overbought 15-minute RSI becomes an oversold 15-minute RSI. We're down here at 10, and the inverse is true. Maybe I'm seeing this big red candle. I'm getting scared here, okay? But I know that short term we're just oversold technically. So I'm not expecting, you know, back to moon, but I am expecting some market support as other traders are also seeing, wow, on the short time frame, we're oversold here. I'm assuming there'll be some buy support in this area until we get some more market, circulation. So these are things that, as a trader, I simply look for in terms of how I'm going to approach a specific trade. As I said, Bitcoin tends to range sideways-ish, up or down, and then have a big move. Patience in waiting for that big move is key. I bet you there were a lot of people that were anxiously wanting to short when Bitcoin was able to pump through 10K. And as you watched on this overbought low time frame chart, your risk reward on a short becomes greater the higher the RSI is. Your risk reward on a long becomes greater the lower the oscillators are on these short-term time frames. When we're just chugging around the middle here, you don't really get that benefit of the doubt of the market there. So understanding risk versus reward, setting yourself up for a better entry is the key to this market. Everybody was very bullish yesterday as Bitcoin was knocking on the doorstep of 10K. Well, if you were bullish yesterday, Bitcoin's offering you about a $700 discount on today's price action. Does that change your bias if you really liked it then and now you're kind of hesitant to buy now? So these are things that as traders we have to kind of figure out. The last thing I want to say about this is it's so hard to know when to take profit. It's so hard to, scale out of a trade only to see it to continue to move on. You're like, oh, if I had stayed in, I would have made X, much more money. Personally, as a trader, I'm trying to scale in at like 2, 3, and 4, and then start to scale out at 6, 7, 8. I'm always trying to take profit once I'm in a profitable trade. There's nothing worse than turning a profitable trade into a losing trade, because you held too long or you were too greedy in what your expectations were of that trade. And the last thing I'll say is Bitcoin is forever. There's so many opportunities to trade it 24 hours a day, 7 days a week. So if you miss an entry, if you miss a moment in time where Bitcoin offered you a good risk versus reward trade, just wait, be patient. There'll be another opportunity and another opportunity. And as a successful trader, I think I'm better when I'm only making a couple trades a day or several key entries a week. The times where I have not been a good trader and have been wrecked are when I'm in too many plays at one time. I'm in, I'm out, I'm being stopped out, I'm re-entering, I'm being too aggressive. And ideally, you can be a very successful trader if you just pick your battles wisely.
Great. This has been some super educational content. And, if there's one thing I can take away from that, it's be patient. I think you said that enough. And make sure you're doing things for a good reason, have a good reason for why you're doing it. So I like to ask one more question before we finish up the show. I like to take this to like maybe a more personal, lighter kind of note. What's like a really big learning experience that you've had? We've all had moments where we experience intense regret on missing out of something or doing something the wrong way. But what was that moment that really like opened your eyes, that experience you had where you're like, this made me change the way I look at things, and I really learned a lot from this. CryptoBirb, do you have any moments that come to mind?
Oh, Jesus. I mean, it's a hard question to answer. There's been a lot of that, day in, day out, you kind of need to figure out, well, new feature you want, a new skill you're actually learning, right? That's the only way you can actually just strive forward towards your ideals. But to be fair, well, I do remember back in, I believe, August or September 2017, there was such a project that was called Triggers. Not sure to what extent you remember that, but it's been, it was there for a while. Then later got delisted of almost all the exchanges. They were like fundamentally they were dealing with some guns industry within the US, and they were literally like saying they were having some partnerships going on with NASA. So it was good stuff back then, and I can remember like bragging about this, on Twitter a lot when I was, well, not so much popular back then yet, and I truly remember this coin kind of like oscillating between, to the best of my memory, it was between 3,000 and 4,000 satoshis, right, per coin, and I was kind of like very well. It's kind of like large oscillation on a daily basis, right? So there were a lot of I would say ways you could literally get trapped in that. But I can remember getting just placing too tight stop, right? And getting stopped out, and right after I was stopped out, it actually just like I believe rallied times 20, right, for the next about like couple of weeks. So I was very impressed with with how I kind of like treat myself onto that. But this was like definitely a good learning experience. Other than that, you can have like this learning experience that you can call to be, let's say, passive, that comes to you just the way it was for triggers that market just gave it to you. But at the same time, I do definitely believe in activity on our end, right? So what I do and what I believe in is, your actual effort that you do that you make on a daily basis, that impacts your learning curve, and finally your earning curve as well, your equity curve. And that is the reason why I do definitely believe in learning and optimizing, lots of new techniques, right? I used to trade Ichimoku, for example, right? Before I used to trade Bollinger Bands, and then I kind of like flipped to the price action alone. Then I am a momentum kind of like combo with price action also as well, as you could see in a couple of minutes past. And this all along with I believe sticking to your plan. And when everybody was shouting Bitcoin was dead, back in March 14th, I was very, very paradoxically bullish on that, right? Because whenever Bitcoin dumps like that, it just simply generates a huge buying opportunity. And whenever somebody just searches around, there are like multiple tweets of mine from this very day and from a couple of days around this one that I was saying how Bitcoin was paradoxically bullish and not really going to zero. So this activity, this active learning that you propose to yourself to master, new skills, new techniques, reading books, obviously, is what lets you kind of like not rely on anybody else than you, because you got a knowledge. You can easily tell when an asset, or not even easily, but you can tell when an asset you believe is undervalued or overvalued, and you just stick to that. You don't really care to what just some cartoon characters tell you on Twitter, unless you don't know what to do. Then you're having a couple of options, right? You can either find some mentors, or you can just go and educate yourself, right? And or just simply stay the way it is and keep losing money, right? But this is definitely providing such a learning curve, both from the passive side and then the active side of activity of a person. Yeah.
Thanks for that. Before I give Chonis a chance to explain his moment, guys in the chat, I mean, do you have any big experiences? I see Sean J, he bought at the top years ago. That was his biggest learning experience. I'd be curious to see what other ones you guys have had. So Chonis, you've had some time to think. What's your biggest learning experience that you've had so far in trading?
Yeah, it's an excellent question, because I think over my trading career, there's been so many inflection moments where I'm like, wow, I can't believe I just experienced that or went through that. And the biggest takeaway is, how can I learn from this experience, and how does that make me stronger as a trader the next time I find myself, in that sort of situation. Back in 2013, when I was a newer trader, I was trading OTC markets, which is like penny stocks, and I got very lucky. I put a few $100s into this one, and a few $1,000s in a few stocks, and I caught a bull run, more like a hype cycle in a bunch of these. And before I knew it, within a matter of weeks, I was up tens of thousands of dollars on paper. And and it was great. This was easy. I can, day trade forever and everything. And sure enough, I learned a hard lesson where once the market basically stopped, once the music stopped and the bull run of the chart was over, I was left holding the bag, and my gains on paper were very quickly erased and turned into losses. So the key learning experience I found from that is understand when you're in a mania, when there's a mania in the market. I think the past several weeks we have seen a mania in the market. Stocks, bankrupt stocks that have no business doing as well as they did, were up crazy amounts of money. And I think a lot of new traders over the past few weeks, for a moment, thought they were kings of the world and this is easy and we're doing great, and said, oh, this is easy. I can make tons of money from my home computer and just, trading stocks and piece of cake. And now I think today's price, the way that I consider myself a seasoned trader here is I've been wrecked a bunch of times, and I unfortunately had to go through that process to learn from it and to learn how not to get wrecked, to understand proper risk management, to understand when or how to prevent me from chasing a runner, FOMOing into something, and to keep my expectations in check. When the good times roll, I'm more than happy to roll along with them. But as I said prior, in terms of trading, you have to take profits on the way. There's opportunities that are there, but if you don't take them and pay yourself as a trader, then what's the point? The only way you can survive as a trader is to keep your bankroll rolling along. So don't put yourself in a position where you can get wrecked and lose all your money. Don't put all your eggs in one basket. There's lots of opportunities there, and be smart and wise with your trading decisions. With Bitcoin, there's tons of time and tons of opportunities to make a good trade. Don't force it. If you're up and you're doing well in stock trades and whatnot, take some money off the table, take some risk off. I think you'll find a lot of more older traders tend to get a lot more conservative in their trading style the more they do it, because they've been through the volatile times, and maybe times have been pretty solid the past few weeks. Money's been made, but there's always a flip side to it. This won't always be that easy to make money, and there'll be times where me as a trader, I just can't find a trade. I keep making mistakes, losing, and my best advice to myself in those times is to stop, walk away, take a few days off, maybe reevaluate what you're doing wrong there, and then try and head back into it again. In order to stay long term in this game as a trader, you have to think long term. So take advantage of opportunities when they present themselves, but make sure you understand risk management. And if you're too overextended, these are times where me personally, I've gotten into trouble. It's okay to capitulate. It's okay to take a loss and just move on. There's nothing worse than having a loss on your books and just staring at it every day, hoping that the chart will come back up and stuff. It's better just to move on and live to fight another day. Trading is not easy, but if you put the time in, and that's the key to this, you got to put the time in. You can't just sit down and say, I'm going to be a day trader and see who's talking about what on Twitter and use that to choose what I buy. This takes time. This takes trial and error. And you as a trader, and you need to find your own style. Everybody has their own style. You can learn from the best. You can learn which oscillators work for some things, which indicators work best. But you as a personal trader need to find your own personal style. And when you're able to do that, that's where you can be successful.
Thank you guys so much for all of that. I think you could probably fill an entire notebook or 3 with all of the content that was discussed here on today's stream. So big thank you and shout out again to CryptoBirb and Big Chonis for coming on the show. Thanks, guys.
Thanks a lot for having us. Really appreciate it. Love you, Burb.
Yeah, appreciate it, guys. You're awesome.
Great. And big thank you for all the people who are here in the chat. Really appreciate you guys coming out and supporting the stream. Thanks for all the questions today and the comments. I really enjoyed reading those. If you enjoyed this week's stream, please hit that like button on the video, subscribe to our channel. We have these streams every week. So hitting that subscribe button will let you stay up to date with which one's coming out next. I'm your host, Jackson, journalist at Cointelegraph. And thank you guys again and see you next time.